Hi, I'm Firas, and welcome back to BrandBucket Academy. In this episode, we go behind the scenes of the domaining world, where creativity, timing, and strategy come together. Margot Bushnaq, founder and CEO of BrandBucket, shares what separates successful domain investors from casual buyers, how they spot trends before they happen, and what lessons new domainers can learn from real wins and losses. If you've ever thought of domain names as just digital real estate, this episode will show you just how much more they can be. Let's get started. Today, we're going to be talking about domainer success stories. First, let's start with behind the scenes of domaining. What does it mean to be a domainer, and how do they operate in the brand name space?
A domainer is what I see, it's short for domain investor. You are an investor, just like someone speculating in stocks or speculating in real estate. You're speculating on domain names as assets and their potential to be sold for more than what you paid for them. And in the brand name space, your customer is a new business. Like, hopefully you're not going out and buying domain names of existing businesses and having that be your strategy. So if you see Pedro's Plumbing down your street, you don't want to go proactively get Pedro's Plumbing and then knock on the guy's door and say, hey, I have this. That's can be considered squatting, if you're kind of actively going after something that somebody should have. But when you're holding something for any number of new businesses, if your asset can be bought by more than two people, if it's broad enough and generic enough, then you're in the brand naming space where you have something that someone starting a business this month or in 3 years or in 5 years could potentially want, and you just have to get it in front of them at the time that they're starting their business.
That's great. Yeah. That's always been kind of like a very interesting, what makes BrandBucket very unique. I felt anytime anybody asks me about, so what is BrandBucket? What does it do? And, like my answer is that, okay, it's a brand in a box, basically, that's just yet to be occupied, yet to become a brand and operate as a business. So it's basically the wrapper that you're ready to go and take your business with. That's a perfect explanation. I like that. How do domainers spot valuable names before the market does?
I think people who are successful domain name investors are watching trends in a different way than other people are watching trends. So you can look at news about startups, you can go on Crunchbase, you can go different places to see what kind of businesses are being started every month, every year. And a lot of people, investors, people who want to start a business, are watching that from a what does the business do perspective. And they're watching what industries are hot and what kind of features users are gravitating to. But when you're looking specifically at the name, you're kind of looking at it from a different perspective. You're looking at, okay, this company is targeting young consumers. What kind of name did they choose? Is it fun? Is it evocative? Is it friendly? Oh, and this company just got rolled up from a big bank. What kind of name did they choose? And it's usually something shorter, kind of gives a more old world feel. Mm-hmm. And you can maybe has a Latin root. And so if you're looking at kind of, rather than kind of what kind of businesses are starting, but how are those businesses branding themselves for their consumers, you're almost ahead of the curve by the time someone else wants to start a business in that space. At that point, later, do they look at their competitors and say, okay, what did they name themselves? What should we name ourselves? You've already beaten them to that point.
Interesting. So, what mindset or skill set separates successful domainers from casual buyers?
I think it's very easy to fall into the trap of buying domain names that you think people will want because you're looking for something that's available, or you're looking through a list of things that are expiring, and it sounds catchy to you at the time, and your mindset is, oh, I would absolutely name myself that. And I think the successful investors out there are very good at looking at each potential option that they're thinking of purchasing and saying, why wouldn't I name myself that? What's wrong with this name? So if you compare it to real estate, you can walk up to a house that's had a nice fancy facelift. The bathrooms are nice and new, everything's shiny, everything's clean, and you could just say, I want this. But you can't really go all in on a house without stepping back and being like, wait, what could potentially be wrong with this? Is it really close to a freeway? Is the neighborhood safe? What's the school district? You kind of need to take a step back and do the what ifs of like, what could hurt my chances of this selling? And you want to build your portfolio around things that, have as many positives as you can, but also as few negatives as you can.
Yeah. So I guess what I hear you say is the successful domainer is able to look at the name and be able to come up with the pros and cons of a name, and be able to fairly quickly, and with practice and with skills developed over time, be able to identify, okay, the pros outweigh some of the cons, and I'm okay with that investment, and this is the value I think it could probably be able to bring, versus somebody just getting excited about, oh, that sounds like a great name, but not really thinking of the potential downside if the negatives are way too many and you haven't had a chance to really think about them.
Yeah, because at the end of the day, the buyer is going to go through that same exercise. You may be paying $15 for a name. The buyer might be paying $1,500 for the name. They're going to do a lot more what ifs at that point before spending that money than you might. So don't let kind of the inexpensiveness of a domain name be overwhelmingly exciting, of like, I might as well just buy it just because. You need to say, what is the potential of this actually selling?
I also recall always, like, when I come up with ideas for you, it's like, hey, what do you think of this? And it's like, I get shut down so quickly. And it's like, well, can you imagine yourself naming your business that? And it's like, sometimes
could you imagine yourself telling your friend over the phone what your business name is, and what are they going to hear,
and what they're going to hear, and how their perception might be? And so it does, that back and forth is something that's very valuable.
Yeah. Did you know that Amazon was originally named Cadabra, and only after an investor thought he heard cadaver did Jeff Bezos decide to change it to Amazon?
No.
Wow. Yeah. So sometimes what people hear is enough to just make you completely shift.
Especially if you're very analytical, you're like, okay, out of 100 people, if only 2 or 3% end up hearing that wrong direction, maybe it's worth it changing the name right away.
Yep.
Makes sense. Okay. Cool. Next, we're going to be talking about real stories. Can you share an example of a successful domain acquisition and resale?
I think one of the most successful resales, from someone buying it when it was available to selling it for a lot of money, is Tesla.com. So it was bought by a Silicon Valley entrepreneur in 1992, back when, not very many domain names were registered already. And at the time, a lot of people were going after, they saw the potential of domain names, and they were going after dictionary words. So just, photo.com and cars.com and beer. And at that time, this person liked the inventor, Nikola Tesla, liked what he stood for, and actually bought the name for himself for a potential business. And in 1992, it wasn't cheap to just buy a lot of domain names. Back then, Network Solutions charged $100 or so every year for a renewal. You couldn't have a lot of names, but he kept paying the renewal fee, even though he never built anything on it, just for its potential. And, it's a 5-letter, easy to spell, represents something that I think is super important in this world. And many, many years later, like 20 years later, he sells it for $10 million to today's Tesla automotive company. So he probably all in had $1,000 in renewal fees up to that point. And he flipped it for a pretty penny.
Yeah. Are there stories where a domainer helped a brand find its perfect name?
There's a specialized business of brokers that it's more their job to find the perfect name. Having a homeowner help someone find the perfect house, and that perfect house happens to be their house, generally comes with a conflict of interest. There's real estate agents exist for a reason. It's to be able to show you a lot of inventory and make sure that you get the perfect fit. And it's very rare that someone owns the exact thing and they can convince you it's the perfect fit. So there's marketplaces like BrandBucket, there's brokers, there's agents, there's all sorts of consultative services around finding the perfect name. And I would hesitate to go directly to, unless you absolutely know that you want a name and you find a way to get a hold of the owner. Generally, at that point, you're already sold. There isn't a lot of back selling that, oh, my name's perfect for you. It's like, yeah, that's a reason I contacted you in the first place.
Yeah. I know with BrandBucket, we just started offering brokerage services, if you want to call it that. Basically, a handhold approach, primarily for the 100K plus names, like more valuable names, if you will. Mm-hmm. And having somebody hand-holding you through the process of finding a perfect name at that price point feels more comfortable than having to do it on your own, especially if you have not chosen the name, if you have not really picked a name. So that's very interesting. Is there a specific a brand name or a story out of your BrandBucket experience that basically you've helped somebody acquire or invest in a name that you feel proud of? Or
yeah, recently we helped a company in Switzerland acquire the name Dina.com, and their requirements were that it had to be pronounced across English, French, German, and Italian, pretty much similarly. They needed to be able to also acquire the .ch version of the name, just because in Switzerland it's very common to represent yourself as a Swiss company with the Swiss extension. And so we went through, and we knew what their budget was, and we went through all of the options that we had that fit all of those criteria. And we were able to acquire both Dina.com and Dina.ch for them.
Very cool. That's awesome. Great brand. Happens to be my sister's name too.
I know that.
Very cool. Okay. Lessons from experience. What common patterns show up in successful domainer strategies?
I think each successful domainer has their own particular strategy. Each person is creative in their own way, and it takes a while to find your footing as a domainer. And I recommend everyone kind of start very, very broadly. You can start with some short invented brandable names, some exact match industry names, and just a smattering of everything. And your first few sales will give you an indicator of what you happen to be good at. And when you find your strategy, you really start focusing much more of your attention and your budget towards that strategy. I don't recommend going all in. Keep some of the side options open, because you never know. You may end up being good at a couple things. But usually domainers do have their own personal strategy, and they're not very willing to share their strategy. because what's working for them is, they don't want a lot of competition. They want to basically corner the market, their own tiny little corner. So yeah, start broad, find your personal niche and stick with it.
Very cool. How do domainers build portfolios that hold long-term value?
If every single one of the domain names in your portfolio is something that you would name a business, if you truly believe in each individual name, that is long-term value. Domaining is a patience game. It can take up to 10, 15 years for something to sell. I've held domain names personally that have sold 15 years later. And they're names that all along, and each time it came up and I had to pay a fee to renew it, I looked at it and I said, I still believe in it. I still would name my company this, and I hold it. So your portfolio will have long-term value as long as you're constantly looking at it through the lens of, is there more than one buyer out there for this? Would I buy it for myself? Would I use it publicly? Would I put this, on a business card? And your portfolio will increase in value.
Yeah. It's a very interesting world in comparison to different assets when you're investing in them. When you're thinking about them as investable assets, it's like like the sell-through which is a term of identifying how much of your portfolio do you sell per year, roughly, right? Mm-hmm. A really good investor is usually somewhere between the 5 and 10%, let's say. You can be, in that high number.
I wouldn't think so. There's different strategies. You can go high quality, low volume, which you might hit the 5% turnover rate, or you can go high volume, which in terms of, usually those are less expensive to acquire. Mm-hmm. Even a 1% can make you profitable. So I wouldn't focus too much on percentages.
Yeah, no, the profitability is a different conversation. I'm thinking about it as the hold time. Mm-hmm. Is that even at the 10% success rate, right? To be able to flush through a full portfolio, you're looking at a 10-year strategy. So you are constantly buying to be able to feed into that model. Profitability comes in based on your uplift and basically your cost of acquisition and how much you end up selling them for. But ultimately that's, just going back to the whole idea of holding for the long term is the strategy, is definitely something that very different than most other assets. Is that, like you buy real estate, you hope to flip it within a couple of years. You buy gold, you're hoping to be able to sell it within the next boom, which can be maybe 2 to 3 year cycle or 4-year cycle. But with domaining, it can actually be a 10-year cycle.
Yep, like Bitcoin.
Yeah, yeah. What risks or challenges do domainers face, and how do they overcome them?
The biggest challenge is the cost of being in business. So a renewal fee on a domain name exists to prevent domain names from being bought once and kind of forgotten about. So the whole concept of the registrar charging you every year is really a good thing. It kind of just makes sure every year, once a year, do you still want this? And so you pay this for every domain name, but it adds up. So if you've gone all in on domain investing, you have to account for the fact that it is going to cost you a certain amount to hold your portfolio. It's not like a stock. I mean, you don't pay a yearly property tax on a stock, but on real estate, you do pay a yearly property tax. And the biggest challenge people face is they get too far underwater. They pay a lot up front, and they don't spread out the costs. They'll buy a lot of domain names in January of a year, and they think they're golden, but then January, the next year comes back around, and there's this big payment that they have to make. And if you don't have the the resources to cover that payment, if you're still getting off the ground, then you're going to take a loss ultimately. So when you start domain naming, you have to understand the risk of, you have to have a little bit of capital that you're willing to tie up until your strategy gets set in place, and until kind of that few-year run of, you're holding something and waiting for the perfect moment. And sometimes that perfect moment is right away, and sometimes it is 10 years away, and you have to budget for it. And so the risk comes in, do you have the capital to hold those assets?
So the financial planning aspect of the business becomes a very important part of it, basically, to make sure that you are setting some money aside to be able to maintain your portfolio, if you will.
Yep.
Perfect. All right. Intersections of passion and business. What motivates someone to get into domaining as a serious pursuit?
I think most people I know that are into domaining, that are seriously, pursuing it, had an early taste of success. Almost everyone I know had a handful of domain names because they were an entrepreneur, had an entrepreneurial mindset, and they bought a few things for themselves and then had someone come knocking on the door and ask, can I buy this? And it's that moment where they realized, wait a minute, I bought this for $10 and now I'm selling it for $5,000. That's a nice little return. And I think that the reason those people are successful is because they did start out with the entrepreneurial mindset. And going back to what we were saying earlier, they're able to correctly identify, is this a good name for a business? Would I use this? And all the things of why wouldn't I use it aren't important enough for me not to keep it.
Interesting. So you have to almost, in a way, put yourself in the mindset of being very passionate about that name or that business that you're building on top of that name to be successful with it.
Mm-hmm. If you jump into domain name investing, if you hear from a friend that, this guy buys domain names and flips them, if you just kind of start from that perspective, it's going to take you a little while to ramp up because you're not coming at it from an entrepreneur.
Yeah.
You need to watch videos like this and realize that the most important thing is education and picking the right names. It's not just a numbers game. You can't just go get 100 names and know that one will sell in the year. You need to pick the right 100.
Yeah. I guess that leads into my next question, which is, how do domainers balance creativity with data and market research? How much of it is creative and how much of it should be market research, data, analytics, on picking a name?
Definitely do your market research. See what names are out there right now, see what's trending. But then a copycat approach definitely isn't very strong, because when there's a certain type of company and a new company is being formed that does something similar, they don't want a name that's very similar. They want something in the same realm, but creatively different. So if you're looking at trends and looking at keyword trends or, like playful trends on how to spell something, you don't want to go exactly after what you're seeing. You want to, shift 15 degrees to the side and use your creativity to buy something similar but not the same.
Yeah. So what I'm hearing is pick your passions, pick your niches within major trends, but don't follow fads. Just try to be a little bit more focused and build a passion towards identifying and finding your skill set and what names resonate with you.
Mm-hmm.
Great. Sounds good. What advice would you give someone just starting in the world of brandable domains?
I would I would advise to just plan and budget for 1 year. So get a handful of domain names. You can either go look at what are called hand-reg domain names, things that are not available, which, considering that there's 60 million .coms registered, finding gems among those is not impossible, but it's not easy. You can look through names that somebody did have, but they let go, that are expiring. That can usually be a little easier, but you're going to pay a little more for those because you're bidding against people at auction. Or you can look for things that are a bit more expensive also, that you can buy, at $1,000, you can pay $10,000, as long as the uplift, the multiple on them if it sells, makes sense for you. But the ultimate advice is, especially if you're kind of buying expiring name auctions or hand-reg, is try not to buy before you get some feedback or an appraisal on it, which is one of the reasons at BrandBucket you can submit a name for consideration without you having to own it first. And you can actually get feedback on, would it be considered the right type of brandable for BrandBucket? And if so, what would we price it at? It's very, very common for new investors to maybe submit 100 or even 200 names before they kind of start falling into a pattern and finding, they've hit the right mark of like, okay, now I get it. Now I get what was wrong with the first 50. I'm starting to now kind of see a trend in what BrandBucket's liking. Maybe I can actually do some research on what they didn't like to see what the pattern was there, and I can also see what they do like. And then once you have an appraisal, then if you go buy it for $10, $15, it's kind of like we've done a lot of the legwork to help you save the money of buying it before someone told you what was wrong with it. And then at BrandBucket, any name that we appraise, we have a guaranteed wholesale buyback. And so you can go an entire year, and if nothing sells and you want to get out of the game, you essentially can recoup a lot of what you paid for the name to start with. And in some cases, you recoup exactly what you paid to start with it. Sometimes it's a little more, sometimes it's a little less. But you get a year to kind of decide if this is right for you. If you've had a sale or two and you kind of got the bug, then you can renew for one more year and you can go around the cycle again, and hopefully you're getting a little better. But the advice essentially is start slowly, get opinions before you put money down, and have a way out at the end.
The big picture. How does domaining contribute to the broader startup and branding ecosystem?
I think many years ago, startups looked at people who were domain investors, and just looked at them as squatters. It's not necessarily the right term. If someone owns a beachfront property and they're not building on it, they're not squatting on it just because you want it. They had foresight and they bought it, and they're waiting for the right buyer to come along or until they're able to build something on it. But still, if somebody has something that you want and they're not using it, it can be irritating. And the ecosystem has kind of progressed to be more friendly towards buyers. And that's been our focus with BrandBucket from the get-go, is to make kind of a nice playing field where people who own assets that people want and where people who want them can come together and meet at a kind of a fair, agreed upon price and move forward. And we're hitting a very nice stage now where domain investors are looked at as real investors. It's same as people who own stocks or who own real estate or who own NFTs or who own crypto. They're legitimate. They have a legitimate, use in the industry. And business owners can, through the help of curated marketplaces, go and get these assets, and at the same time, it's saving them, brainstorming time. It's putting options in front of them that they may have never thought of. It's helping with their creativity. It's helping vet that, maybe something is as good as I thought it was. And it's all coming together where having a premium domain name available to you that you can get started with immediately is valuable enough to a business owner where that transaction can happen without a lot of animosity.
Yeah, what resonates with me as a founder of many companies in the past is the contribution is ultimately the whole lean startup mentality. It's just move forward, get to market as quickly as you can, and start testing your ideas and start getting market feedback. And picking a name is something that's very specialized and extremely creative, something that not all founders might have the capability to be able to do. And instead of trying to get into the rabbit hole of trying to teach yourself to become that creative, just being able to lean into a marketplace where all these creatives are working and actually adding value into that system. It's just adding more fuel into the fire of the startup ecosystem. It's basically making the startup get to market faster, quicker, and leaner in many different ways. So
yeah, just because you're not bootstrapping and you spend $2,000 doesn't mean that $2,000 is gone.
Yep.
If you fail, you put it back up for sale.
Exactly. Yeah. What role do platforms like BrandBucket play in helping domainers succeed?
BrandBucket from the get-go was a marketplace for names that might not otherwise be found from a particular keyword search. So domain marketplaces have been around a long time, but they usually were full of everything. And they didn't have prices, or each owner was putting a price that either made sense or didn't make sense. And if you searched a keyword like click, you were just going to be served hundreds of thousands of names that contained click. But if you have, spelled the correct way, C-L-I-C-K, but if you had a name that was click with a Q, or if you had a name that was a synonym of click, or that kind of gave the same sense of online marketing or e-commerce or something that like a mouse click would, those names would never be found in a traditional marketplace. And so a curated marketplace by someone with a particular taste that you trust, with a lot of metadata behind it, helps bubble up a lot of the gems that might otherwise never be found in a traditional, very large, dig through the hay marketplace.
Yeah, definitely. It's been a long journey, but ultimately the search capabilities, the taxonomy around the name, the synonyms, as you mentioned, the sense, like you've mentioned many different domains that were invented keywords, but they might give you the sense of a click, but may not even have the word or even a synonym of a click in it. But ultimately, they kind of resonate that feeling of something is moving in an abrupt or a certain pattern that gives you the click feel. It was one of the hardest parts of actually being able to bubble up options to founders and to buyers. So and continues to be one of our value add, I guess, at BrandBucket, being able to throw you in and explore and find names that definitely resonate with the brand that you intention to build, but you will end up with names that you haven't thought about or you would never be able to find in a conventional way.
Yeah, or in the case of invented names, if a founder knows they want a 5-letter name, for instance, and they were to go to a traditional marketplace, they have to spend so much time sifting through things that cannot be pronounced. And if you get to some gems that can be pronounced, those may not have a price on them. And then you have to start the negotiation process. Or they might have a ridiculous price on them and you just discount from the get-go and you don't even make an offer. So just being able to go somewhere, have kind of the junk, I want to say, I don't want to call domain, like there's domains that are not on BrandBucket that have a lot of value, but if you're looking specifically for something pronounceable, you want to go someplace where all you're going to see is something pronounceable. And then the prices make sense to each other. One might have one synonym and looks very much like a dictionary word, and it's going to be priced much, much higher than something kind of completely made up, maybe some obscure letters, but that's your choice at that point, whether you want to pay a little bit more for something a little simpler or not.
Yeah. It goes back to the core value, which is you're serving the buyer. At the same time, you're catering the capability to the seller to be able to decide if the price that BrandBucket sets for the name is acceptable to them, because that's the fair market value. And if it is, then everybody wins, and the seller will make their money, and the buyer will be able to walk away. Just the fact that the pricing is actually being determined based on actual market value by a third party gives comfort to both ends of the equation, buyers and sellers, which I think makes you very very unique in that way. Okay, what mindset would someone adopt if they want to treat domain names as a long-term strategy?
I think you need to be an accountant to some extent. You can't just go all in and throw a lot of money at something without understanding the math behind it. You need to understand how much your renewal costs are going to be. You have to factor in your sell-through rate as a newbie versus your potential sell-through rate in 4 years when you've gotten a little better at what you're doing. And most people fall into the trap of not running the numbers and not doing the math, and just understanding that this is an investment and you need to treat it seriously as an investment.
Yep. And it's an investment not only from a monetary perspective, but also in yourself and your skill set to be able to identify the names and be able to, buy, engage, and reassess, and then keep going forward. So awesome. Great. Well, this is the end of our segment, and appreciate you taking the time. Very insightful, extremely remindful, as we go through and we pick names ourselves into, starting our own businesses or wanting to invest in. So appreciate you taking the time. Behind every great domain is an investor who saw the potential before anyone else. Whether you're building your own portfolio or just getting started, visit brandbucket.com to see how brandable domain names are changing the way startups launch. You will find expertly curated names, real-time feedback tools, and a supportive ecosystem to help you succeed. This is where domaining meets branding. Thanks for watching, and we'll see you in the next episode.